Welcome to a whole new episode of Candidly Yours. This is Ritik Mukherjee, and with me today we have a very special guest, a Category 1 merchant banker from Calcutta, very young, dynamic, director of InCap Advisors. Is it sometimes very loosely said, and it's very popular also that it's all about money, honey.
Yeah,
And
yeah,
particularly when a company wants to grow, it needs money by
money.
all means.
Absolutely.
And there are more ways than one to raise those funds, and it is the merchant bankers who help those companies to
Right.
find out the right pathway, how to raise funds, where to raise funds, and stuff like that. So I'll start by asking Samir ji, Mr. Samir Agarwal, when a particular client comes to you, so how do you, take a call that which way to be taken? Because normally we know one has to take a very judicious mix of debt,
Sure.
equity, and all that. So as a merchant banker, how do you suggest? How do you guide them?
So, Ritika, first of all, thank you so much for having me here and giving me this platform to share my perspective as a merchant banker. See, the good thing is that when I started my career, it was almost about 20 years ago. And I started as an investment banker and then graduated to a merchant banker as well. So we have seen all sides of the ecosystem where companies as small as say 10 to 20 crore turnover to companies as high as 10 to 15,000 crore turnover, we have seen, evaluated and seen their journey over a period of time. So we have seen how a particular company in a particular industry at a particular given point of time is going to perform or will be performing in future. So when we meet a particular company, the foremost important thing for us is to see the pedigree of the promoter, the industry in which they operate, because that market size is very important. And the third and the most important thing also is how do we help them to come out of their shell or in a particular size and help them think big so that they have that, if we can help them in achieving their aspiration. So promoter, industry and their pedigree, these are key things which we look at while evaluating any company.
So this is the merchant bankers or typical merchant bankers perspective, or even the company, investor company or investing company, they look at these things.
So see, for us, we are actually an important conduit between a company and an investor. If we sell any one wrong product to an investor, any wrong company, they are gone forever. I mean, they will never invest in any of the other companies which you bring. So it's become a kind of a very important relationship, both across company to achieve their objectives, as well as investors that know where you are putting money. It's a right bet. So the call which we take is primarily aiming towards investor safety. But at times what happens is even investors become greedy, right? So they want at a particular valuation, they want everything cheap. And that's where we play as a balancing role and try to get a little decent valuation to the company. That, yeah, listen, there's a growth story and you'll have enough on your plate to earn in the future. So to answer your question, it's a mixed bag where we help company, we analyze it from company perspective, but at the same time we keep even investors' interest in mind. So the points which I said, probably investor also looks at it. Yeah.
So how challenging is this role to strike a balance between what the investors want and what the company wants?
See, it's always it's like we say, it's like a real estate deal. When you want to sell, you think that I'm selling it cheap, and the person who is buying it always thinks that I'm buying it costly. Same is deal making, same is raising capital market money from the capital market. Every time you say promoter that this is the valuation, aren't we selling cheap? That's his that's his first typical statement. With the same valuation, you go to an investor, aren't we buying it expensive? So it's always like that. And that's where we believe that if you have built up your case logically and you give your arguments on both sides of it, that why it's not expensive, why it's you're not selling it cheap, so the deal happens. Uh, I've been involved in various deals. At least in Eastern India, I've been involved in quite a bit of marquee deals where a lot of negotiations gets involved. One thing I've realized, however lucrative a deal is, if there is no reasonability on both sides, deal will never get concluded. And that's where our role comes in. That as a investment banker or a merchant banker, please don't get always influenced by the person who has given you mandate. You might be representing one side of the deal, but eventually, if it's a balancing deal, then only the deal will consummate. So it's a challenging task to get everyone on the same page, but I think that's for what we are paid for, to get that right balance.
So even for letting that deal happen, you will have to take a kind of balancing role.
Yeah, so it's always, you should know what your objective is. The moment you know that this is what I have to achieve, people would have high expectation, people would have always some kind of different expectancies from the deal, but you have to set your expectations right on both sides. And the moment you do it, I believe it's easy to get the deal done. So closing the deal is like 5%. Managing expectations, bringing them on same page, living that journey is almost about 90-95%. And that's the most painful part. But at the end of the day, when it gets signed off, that's where time to cheers.
I think you mentioned the most apt word, journey. It's a kind of journey.
It's a kind of journey
where you handhold the company as well as the investors or the likely investor.
Absolutely.
But would you suggest something that even before coming to a merchant banker, how would a company prepare itself for kind of fundraising, maybe 2 years or 3 years down the road?
So, very pertinent question, Ritvika. And trust me, whenever we meet any company, we have realized that sometimes they are too early, and we tell them, sir, probably this is what all you need to do. And we don't think you should hit the market at least for next 18 to 24 months. And we are there to help you out in case you need us, or we give the general guidance that this is what you all need to do. See, we all know smaller companies, they don't have all those kind of wherewithal, they don't have bandwidth to hire professional CEOs and everyone. In fact, the promoter himself is a CEO. That's the way he runs the company. And he has been running that company for ages now. So it's to bring that mindset of getting listed, becoming transparent, that itself is a huge change for him. So it's a journey which we live with them. We explain them pros and cons, what it is, what not it is, and guide them through smaller processes. We tell them that from here on, for say next 1 and 18 months, you assume that you are listed. You are becoming a public company. Start disclosing everything in your accounts. Become more accountable. And when they start putting all those small things on the paper, they realize that they are doing it for their own good. And so by the time they come on board, probably 50% of the work is done. Because they are mentally aligned that, this is all what changes I need to bring in the system. This is what all changes I need to bring into my accounting system and make it more transparent. So it's a journey, and we all live with it.
And if I got it right, your journey with the company starts with or from the preparatory stage, and it goes beyond raising a fund, because once someone raises a fund, the responsibility goes up. So even if a merchant banker is no longer there, he has a role to make sure that the company plays that responsible role post raising of funds.
So we recently had a capital market event in Calcutta under a chamber of organization where I'm an active member, and we had a session where we called all those successful entrepreneurs who raised capital, and everyone was asked, how was the journey? the first question is, journey has just started. Raising capital is the first step. Actually, if you ask me, I mean, raising capital itself involves a lot of steps. But as a successful entrepreneur, raising money is not that I'm successful. I've just raised the money. I need to deliver to investors' expectations, to my shareholders' expectations. So there, we again act as their advisor, tell them whatever important changes you are bringing into the business, whatever new achievements you are doing in the business, how that needs to be portrayed before the shareholders and everyone, so that the value starts capturing. And then leave apart that, there are a whole lot of compliances, thanks to our regulator, who wants to see that wherever public investments are happening, adequate disclosures and transparencies are there. So yes, so raising capital is one part, but then post raising, how to handhold the company in becoming more and more transparent. And the other important thing is that most of the companies or the entrepreneurs are now realizing what value it creates, because investors reward in terms of higher multiple if such companies are being transparent and raising. So our journey continues even beyond raising capital, because that's a first step. There are follow-on steps of further raising of capital.
And in today's context, you must be aware that with the growing interest towards SME emerge platform, a lot of SMEs and MSME companies, they are also raising funds. In fact, it's a very in thing now.
Absolutely.
So for so long, you have been dealing with large corporates and large ticket size.
Absolutely.
But now these MSMEs coming into play. Has there been any change or any palpable changes in the game?
So, in that particular event, the whole time member of SEBI came, and whenever SEBI comes, generally people expect them to talk about the broader capital markets, the primary and the secondary capital markets, how things are. So very surprising. He touched upon the subject that I see Bengal as a future of SME IPOs. The kind of potential it has, if you go to your Udyam platform and all, there are about more than 30,000 MSMEs registered. Hardly 1,200 would be listed. So you can just imagine the potential it has. And there have been significant success stories where companies raised small capital, they multiplied their business, and today they all have migrated to the main board and enjoying almost 1,000, 2,000% kind of return, and the shareholders have made money. Luckily, those are now being portrayed in the right manner, whether it be National Stock Exchange, whether it be Bombay Stock Exchange, whether it be regulator. They are explaining, coming on board, doing a lot of events. They are partnering with merchant bankers like us who are active in a particular geography, that let's go together, explain the benefits and bring companies on board. See, what happens is, and this is what I have heard out from the lender side also, most of the MSMEs grow through bank borrowings. If you go to the bankers, they said that if a company is listed, we feel more comfortable because the transparency is there. And of late, I have seen a sudden surge of the next generation entrepreneurs in SME businesses to come forward and openly talk about, can we list our companies? Is our company worth enough getting listed? And that's, I believe, is a huge plus for the entire ecosystem, because SMEs are here going to stay. Those are the future large companies, and hopefully this capital market.
They are the largest contributor to GDP also.
Oh, absolutely. I mean,
and
they are
employment.
And the kind of employment MSMEs create is insane. And that's where the regulators and everyone are very keen that SMEs come forward, take this route, raise capital, multiply it through borrowing and think big. So say, classic example. Today I'm thinking of, say, setting up a 50 crore project. I know that I have my 15-20 crore net worth. I can go bank, take 30 crore borrowing, and I'll implement a 50 crore project. I analyze their balance sheet. I tell them that looks like based on your net worth, based on your profitability, I'll be able to raise about 40-50 crores of equity for you. He said, is it possible? I said, yeah, your business sector looks good. You have been continuously making profits. It looks possible. And then say if you raise 50 crore equity, you can easily leverage it 2 times, right? So you can raise 100 crore borrowing. So suddenly from a 50 crore project, someone can think about 150 crore project. So that's a game changer which is going to happen.
And whose responsibility is it to bring these, as you mentioned, large MSMEs to either SME emerge and eventually to the main board?
So it's an entire ecosystem effort. If I believe I can go and convince a lot of time, and trust me, sir, even the governments now are so keen that they are partnering with regulators like NSEs and BSEs and telling them, go to our district centers, go to a particular district, create awareness program. And we are partnering along with those exchanges as a merchant banker, going there and explaining the benefits. So I would say it's not only one person as responsible, it is the entire ecosystem, all the constituent stakeholders in the system, they all are coming together, because the process has become more transparent. The regulator has been watchful. They are bringing a lot of changes, transparencies, and their entire intent of bringing this change is to see that the retail investors' interests are protected. So only good quality SMEs will come now. There are certain instances have happened in the past that few of the companies which are not good quality have been able to raise money, and they've been penalized too. But now the processes are made such that only good quality companies can raise capital. So I would say the entire ecosystem is there, and everyone
and
is
creating
playing
awareness is also very important.
It's very, very important, because a lot of people still are not aware that their company can get listed. So we recently filed one DRHP, draft red herring prospectus of a company which are into luxurious retail chain products. So it took us about 3 to 6 months of mentoring, talking, explaining, and eventually they took the plunge. So now we are having investor calls with them. So even promoters are having a feel-good factor that our company can get listed. So yes, it takes effort of everyone in the ecosystem to bring out an IPO.
Is there anything called the right time to raise funds, or maybe some company needs a fund even like this current situation, which is a very volatile market?
Right.
So would you suggest a company to go for raising funds at this point in time, or wait for some time and at the right appropriate moment go and raise funds?
So what you're saying is absolutely right. When there are sentiments which are not in your favor, generally even good quality IPOs find it difficult to get investor. And as we all know, it's a journey. I mean, once you start a journey, right from planning to various kind of audits to DRHP filings to approvals from the regulator, finally listing, it's about 9 to 12 month process. What we tell our clients or the companies that, let's start the journey. Let's run the process. It's not that we have got approvals, we have to list it immediately. If the market sentiments are bad, we can give it a pause for some time and then list it when the sentiments start looking positive. Luckily for India, the sentiment has not been that bad. We had first quarter of this financial year where a lot of capital was being with the Trump coming in, and in January 2025, initial 2-3 months were a little challenging. But I think from April onwards, there's been a lot of capital influx happening, and what people have realized that
irrespective of the external factors,
irrespective of the threat of
fresh tariffs,
fresh tariffs, irrespective of wars, irrespective of whatever, these would have knee-jerk reaction, right? For say 4, 5 days, 7 days, there could be bloops. But today investors have become extra smart. I mean, they know that, if I'm putting money today, I'm putting it for a little larger horizon. And India's story is there. Everyone believes that it's such a huge consumption market. So, paisa dalna hai, put money in India. So, no one gets too much bogged down with the short-term hiccups. So, luckily, so that way, momentum is there. If for a particular 10, 15 days, 3 weeks, 4 weeks, a month, there's a little bad sentiment, we can always defer the IPO. But going through the journey itself is a huge, huge learning for any company. So we advise everyone, if they are eligible and if there is a need of money. See, there's no point going to the market if there's no need, right? So if there is a need of money, specified objects are there, why do you want to raise the money? Start the journey, and we can always time it when to list it.
What about overseas fundraising?
So, typically there are two segments to it. There are main board IPOs and then there are SME IPOs. SME IPOs we have seen is mostly concentrated by the domestic. Retail investors, the domestic QIBs, the domestic anchor investors. Main board IPOs attract because they are larger in size. They can reach out to global investors. So global investors love India. They are putting money because they believe the kind of consumption it is here and the kind of growth it is consistently showing. Probably a lot of money is coming. For SMEs, that remains a little challenging area. But given the transparency which they are bringing, and given over a period of time, I believe that line will also get reduced, and hopefully even the foreign investors will start investing in SMEs. But yeah, getting money from overseas is not a challenge. People are looking at putting money.
Another sector which we haven't touched so far is the family business.
Yeah.
They also need to kind of bring in professional structure, raise funds, scale up. So what would you suggest or advise them? How should they go?
So, one good thing with this IPOs coming in, that you need to have equal number of independent board members if the promoter remains the chairman of the company. With this independent board members coming in, they also ensure that professional management comes in along with the promoter. So that thought process is changing to get a right educated people, right experienced people come on board, because they bring new perspective. A lot of time promoter works with one mindset, profit. A lot of this time, the new perspective comes in, which talks about new initiatives. Now ESG, for example. So a lot of these funds have now become ESG compliant, that if you are focusing on social awareness and pollution free, sustainability, we are going to put money. So a lot of these new perspectives are coming in, which the professional people are bringing in. Mindset is changing, though it's a little difficult. It takes a lot of effort in convincing the promoters of SME at least to bring that kind of change, but it is coming in, and that's where the demand of good qualified people have shot up like anything. Because earlier it was mostly main board, the larger companies, mid-sized companies, but even SME companies have now started attracting good talent.
Is it more challenging to convince the family business owners, the promoter-driven companies, to be more professional, go to these fundraising routes, scale up, and all that?
So I would rather not say that it's more in family business, but it is more individual driven. The promoter who himself is driving the business, suddenly you tell him that bring a CEO or a operations person. He believes, "Main kya karunga? What will I do?" Because all along he has been driven the business. So it's very difficult for him to feel that, let me take a step back, bring a professional CEO and mentor him to grow this organization. So whether it be mid-size organization, family business organization, if it's a very promoter-driven organization, it's a little challenging. But where already there are professionals who have shown the value addition, it becomes a little easy. So to answer your question, yes, where promoters are very, very hands-on, it is a little tricky to get those kind of management.
And when it comes to InCap in particular, what is the typical ticket size that you look at?
So, for us, luckily, we have involved in various spectrum of mandates, right from capital raising through debt, equity, deal size for merger and acquisitions, or even resolutions. Resolutions, when we say, it could be dispute, it could be debt. So we would have handled about company having 10,000 crores worth of borrowing, right? So there my ticket size could be very large. We would have raised capital for as low as 50 crores also for any particular company. We would have worked on deals involving 500 to 1,000 crores also. So if you ask me, as an organization, as an organization, different products would have different subset of quantum. For capital raising, we would look at anywhere from 50 to 100 crores. For deal making resolutions, we would look at anything upward of 500 crores. For debt, ideally, depending on nature, 100 to 1,000, 2,000 crores, anywhere we'll look at it. So product specific deal size, but anything upward of 50 crores, we look at it.
So one last question. I know we are running out of time, and
Sure.
you will also have to make a move. From your own experience, do you see a lot of mergers and acquisitions taking place at this point in time, kind of inorganic growth that the company should look at? Do you see these happening?
So,
which may lead to consolidation also?
Yeah. So India is a very attractive market, and at the same time, very difficult market to grow a business from scratch. Most of the companies, when we speak about, if there is no right fit, then they will go for organic growth by setting up greenfield plant. But whenever they feel that it's a right fit and probably we have the product segment, their first preference is always inorganic growth. Why don't you look for this company? And they give us targets at times. I want to acquire this company. I want to grow big. So that way, India is a very hot market for merger and acquisition. There are data which will prove that the market has been very robust. What has fueled this growth is also large private equity funds coming in and taking controlling stake. So they are buying out promoters and putting up professional management to run the business. So that's another area which is now developing very rapidly in India. And what is fueling this is also in most of the cases where, say, next generation is not there. Promoters are looking at cashing out, and funds believe that they have developed a very sustainable business model. Why don't we bring a professional management to run it? And they don't mind paying top dollars for that to the existing shareholders. But yes, lot of classic examples. Wilmer acquired Adani's stake. They paid them about $1.5 billion. So they know the potential it has. A lot of consolidations happening in JVs where foreigners come with a majority or equal stake. Now they're selling it to the Indian counterparts. So a lot of such activities happening.
In cement sector, for instance.
Yes. So, I mean, I have nothing to add more, but Adani is like one big buyer. But yes, I think across the sector, deals are happening. You just need to be keep your eyes and ears opened. I believe everyone is a seller for a top dollar. You just need to convince them. Yeah.
It has been really fascinating and wonderful talking to you, Mr. Agarwal. I'm sure at the end of this 20 or 25 minutes odd discussion, many people would raise one question in particular that this guy said he has 20 years of experience. They might raise some doubt about you. You don't look like that.
Yeah. So, no, Rizvika, thank you so much. But yeah, I have more than 20 years of experience. Thanks to my parents who have given us good education, good background. One thing I've realized in life as a piece of advice to everyone, however difficult the situation is, always keep smiling, always be humble. I've realized and I've seen this, it will work in your personal life, it will work in your professional life. A lot of my clients have come back, after say 3 years, 4 years of talking and not giving any business. At the end of 5th year, they will come back that, at that point of time, you gave this advice. And I still remember. I didn't give you work that point of time, but I remembered your smiling face. So I'm coming back and giving you work. So this is what I've realized, that humbleness and calm and cool attitude takes you a long way. So that's
So
where
that's the most important takeaway from today's discussion. Wear a smile always and be humble, and success will be yours.
Thank you so much, Ritik.
Thank you very much.
Thank you. Thank you. Pleasure meeting you.
Pleasure
Thank
meeting you.
Thank you.
बाबा, मैंने एक बहुत अच्छा मैट्रिमोनियल वेबसाइट देखा। हेडलाइंस त्रिपुरा बीए बंधन बिल्कुल हमारे जैसे परिवारों के लिए बना है।
ओ बीए बंधन, नाम तो सुनने में ही भरोसेमंद लग रहा है। क्या खास है इसमें?
यहाँ सब कुछ पारंपरिक अंदाज में है। सिर्फ वेरिफाइड प्रोफाइल्स और हर जाति भाषा के हिसाब से सर्च भी कर सकते हैं।
अरे वाह, अब जमाना कितना बदल गया है। हमारे जमाने में तो पड़ोसी ही रिश्ते लाते थे।
बाबा, अब पड़ोसियों की जगह इंटरनेट ने ले ली है।
अच्छा, मुझे भी दिखाओ जरा। तुम्हारी माँ को भी बताना पड़ेगा। देर न करें, आज ही रजिस्टर करें।
আনন্দ আর ভালোবাসার দীপ্তিতে গড়া সমুজ্জ্বল পরমা, ঠিক তোমারই মতো। শ্যাম সুন্দর কোম্পানি জুয়েলার্স, আগরতলা, উদয়পুর, ধর্মনগর, কলকাতা।